Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. Today we're going to talk about hyperinflation. Do you remember this coming up in the past? Well, it's kind of resurfaced a little bit based upon a report that came up this week from Elliot Management, pretty prominent hedge fund out there. We're going to talk a little bit about what Michael Burry had to say about it and what Jerome Powell's effects are on hyperinflation.
Two Stupid Guys Trade Stocks.
This is the scary, scary thing that everyone's very scared of. And it's legitimate. It's terrifying.
Exactly. No one wants this to be like a future anywhere else in the world again. Are we on a track towards this? I don't know. But like there was some discussion, pretty prominent hedge fund talked about it this week. This is the Weimar Republic, and when they had a massive hyperinflation kind of period. Now, Burry has talked about how there were 8 years of digestion and 1 year of implosion. So it's a really kind of slow burn until all of a sudden it explodes. Now, are we truly on a track for this? Is the kind of the pointer discussion for something like that. This is what his tweets kind of looked like back in the time when he was talking about this kind of massive bubble and how the bubble would pop and that sort of thing. This FOMO crash drawing in retail. As you can see, this isn't exactly really fresh material. This is going back to 2021 here, right? This isn't something he's been talking about too much recently, but he did talk a little bit about it back last year. And same thing, greatest speculative bubble of all time and all things by 2 orders of magnitude. Do you know what order of magnitude is, by the way?
Exponential, so 2 zeros.
Yeah, exactly. So it'd be like 100 times. Is
Yeah,
what he's saying there.
pretty gross.
Yeah, 100 times larger. The reason why this resurfaced this week is Elliot Management. This gentleman right here is Paul Singer. He's Paul Elliot Singer. That's where he gets his name from. He's the founder of this hedge fund, founded in 1977. Their track record on average, they have beat the S&P 500 over that time period. So I think it was around a couple percent or so beat by the average for that 40 plus year duration. So he's not like a joke fly by night guy. He is managing over $50 billion in assets under management. All right. So this is like legitimate, hedge fund that's been around for a long time. Right. Archivist. 13.5% annualized returns over that time period compared to 11.6. So he released a letter this week that the Financial Times got a hold of. And he was talking about how, it's not exactly probable, but we are in that kind of area where the likelihood of hyperinflation is becoming more and more possible, at least in his view, right? That's where this whole kind of crux comes down to, is whether or not we have a risk of that happening again.
How prominent is he in the investor world? I guess, okay, my question is, if Buffett said this, it's almost going to happen just because he said it. Like, it's just everything's doomed, right?
Understood. So I remember there was one article looking at top hedge fund managers. It was from 2016 or so, and he was ranked at number 8 or 9. So top 10 in terms of hedge fund managers. So what like they were basing that on.
Right under Cathie Woods. It's like right there.
Yeah, exactly. But this whole idea that, we've seen it all, is what he was saying, is investors should not assume they've seen everything. Just because we've navigated this previous financial distress in 2008, mortgage price crisis there, that we should not be kind of reassured that we have the skills and knowledge to navigate this new kind of crisis that we're seeing here. And that, we've already seen $28 trillion in kind of asset value lost. That's a crazy number, huh?
How did he get that? Oh, global equities.
Global.
Sorry. My bad. Oops.
Yeah. And then, this is one part where I actually completely agree with him. He's talking about how central banks have worsened the financial picture. And that was just honest to say that the true culprit of high inflation was attributed to price pressures from supply chain disruptions. That was certainly part of it in the beginning kind of phases of COVID, but that has not persisted throughout the entirety of this. I mean, I think anyone that goes out in public and has eyes is capable of seeing that there is just massive consumer demand. Anywhere you go right now, it is just packed to the gills. It's insane.
Including actually still cars, to be honest. Because having a kid, you got to get a bigger car. It's still, you're looking at like 4 or 5 months for reasonably priced. Like it's pretty wild.
Yeah, exactly. So he's talking about this looming hyperinflation could lead to global societal collapse and civil international strife. Certainly, if this were to happen, yes, like I don't think they go, kind of. It can't happen without it. Basically, is my point. Is that if you're going to have this massive period of hyperinflation, you're going to have this kind of dramatic economic impact upon all these different countries, and as a result of that, you get this unfortunate, like, infighting and finger pointing, and it's always easier to kind of point your kind of hatred towards an outside group, which is what we saw after the Weimar hyperinflation. That's why we get World War II in large part, is because of that massive destruction of the currency for the Deutschmark.
Right, and that is what Jay Powell, he doesn't keep referencing that specifically, but when he does his rate hikes, he's very stern that this is going to continue, right? Because he's like, and I think he said this a week ago, the risk of being too soft is way worse than the risk of being too hard. He would way rather
Exactly.
overcorrect than undercorrect, because undercorrect can have like doom and gloom
Yeah.
possibilities, right?
That's what he's trying to prevent.
Yeah,
He is literally trying to fight off this hyperinflation.
right.
All right. Yes, in part, he certainly helped cause it by the massive run up in the Fed balance sheet during the pandemic. No doubt about that. But that is what he's trying to crush right now. I'm actually reading Paul Volcker's book, Keeping at It, which is funny because he quoted it back in his the Salt Lake City press conference. I'm sorry, not Salt Lake City, but the Jackson
Jackson
Hole.
Hole. Yeah.
Jackson Hole. Yeah, he was like, "We're keeping at it," which is the title of Paul Volcker's book. Paul Volcker is the Fed chair that broke inflation back in the 1980s. So and that was the major lesson at that point, was that you cannot let the expectation of inflation remain, and that the longer it remains elevated, the higher, more likely it is that it continues to grow upon itself.
Yeah.
So if you completely haven't been in the news recently, this is the 12-month CPI inflation data here. We are still kind of right at this elevated level, but we've been flat. We haven't gone up significantly recently. We're still remaining kind of at this elevated level
Yeah.
persistently.
But unfortunately, we're staying there. And the problem is, Jay Powell will do these increases, and people are expecting, like, all right, well, then 2 months from now, we're going to drop down to 6. No, it takes a long time.
Yeah. Yeah. So he talked about that recently, was the most recent Fed kind of report, where he was saying that, traditional kind of research into the lag effects of interest rate hikes on inflation showed that it was a significant lag there. He said more modern data is saying that it's actually a little bit shorter time horizon. I'm going to try to find the actual economic papers and see if I can understand them. I do have background reading scientific literature, just not in economics. Sorry, to see if it kind of makes sense. But in terms of the PCE inflation, which he has said is his favorite metric, this is core PCE. We
Yeah.
came up to this elevated level, and we're just remaining there.
We're just chilling there.
Despite the massive, unprecedented pace of these rate hikes, we're still hanging out at that same level. This week is going to be another kind of big news one, which is ironic because Powell has said that PCE is his favorite metric. CPI tends to be the one that moves the market more. I don't know if you've noticed that.
Yeah, it's really weird. I think I don't really know why he prefers PCE, but the market, even if it's up zero point 0.2 or down zero point 0.2, that will dictate what happens that day. It doesn't make any sense. I don't know.
Yeah. So this actual Thursday, November 10th, 8:30 a.m., we get the CPI reading for October. So expect a wild day, regardless of what direction you want to take there. But it's going to move. That's for sure, because we're still at a place where it doesn't take very much data wise.
Yeah. All right. Well, guys, let us know if you think hyperinflation is a legit risk, or if you think that, the bad is over. We may get a little bit, kind of uncomfortable, but we're going to be better from here. So, yeah.
Let us know.